Good day. I'm Martin Gagel with Market Radius Research. It's Wednesday, November the 9th, 2022. We've got CEO Steve Dalton and COO Omar Bajorquez of Revolve Renewable Power. Revolve is a developer of solar, wind, and battery renewable power generation projects in the US and Canada. It's great to have Steve and Omar join us today. Revolve has an operating portfolio of 2.85 megawatts with an additional 6.2 megawatts under construction. The company has developed and sold over 300 megawatts of projects and is targeting 5,000 megawatts of utility scale projects, along with a growing portfolio of revenue-producing distributed generation assets. I'm looking forward to understanding their growth strategy and their opportunities in the US and Mexico, especially given Biden's Inflation Reduction Act as a tailwind. Also, I'm hoping to get an update on the state of the renewable energy market, especially how last year's rise in inflation, along with higher interest rates, is affecting project development. But please remember, this is neither a recommendation nor investment advice. We're here to learn about the company. Steve, Omar, thank you very much for joining us. And please tell us about Revolve.
Appreciate it, Martin. Thanks very much for the time to talk to you today. Looking forward to the discussion. In terms of process, I'm going to hand over to Omar. Omar is going to walk us through the presentation. And then I think between the two of us, hopefully we'll be able to get through any questions that you have as we go through slide by slide. So I'll hand it over to Omar and we'll get through the presentation.
Well, thank you very much, Martin. So let's go. So we can talk about the company and what we can offer at Revolve. So why this is an investment opportunity? It is because we offer, let's say, a smart and responsible investment opportunity. And this is because of three main key facts. And it's the ESG, as we can help companies to comply with their policies that they need to put in place. And we will see it more often now during these coming years. Second, we have a diversified strategy, business strategy, that it's about two different business models to tackle the renewable energy market. And third, we know what we are doing. We have experience. We have a long track record in the sector. So about the company, I would like to mention that we have more than 10 years of experience. Now we are listed on the TSXV since March of this year. And we mainly have a portfolio of projects on renewable energy sector. And basically the technologies are about wind, solar, and battery storage. And this is located, our portfolio in the US and in Mexico. I think this slide is very good since it's like a snapshot of our present and of our future. Our past and our present, let's say it that way. Since the 300 megawatts of projects that we have successfully developed, we have already contributed to the planet, since we have avoided 525,000 tons of CO2, and this represents or has represented $17 million in revenue, from the sale of the projects, which meant for our shareholders on a 5-time return on investment. So our current portfolio, it's formed by 3,600 megawatts of individual renewable energy projects, which means that this is 10 times, more than 10 times of what we have done previously, and I have mentioned it. And this is not including the 1,200 megawatts of greenfield projects that we have on the queue. So we are analyzing them, and also it's in our portfolio, it's including let's say almost 9 megawatts of capacity on distributed generation projects that comes from 2.8 assets in operation and 300 that are installed but waiting for some permits just to proceed with the operation, and another 3.2 that will that are just waiting for starting the works. And I think that this is possible thanks to that 60% of our total shares issued belongs to the board, the management team, and the insiders, some other insiders. So these show up that the corporate team, it's fully aligned with the business strategy, and this is very important for the purposes of our shareholders' interests. If you can just please, Steve.
Yeah, I'll give you a bit of background on my own experience, Martin. So I guess I've been in the sector for around 20 years now. I've spent pretty much all of my career in renewables. Would have spent the first half of that as a kind of project financier of both renewable energy projects and infrastructure here in Ireland and the UK. And then around 2012, would have kind of left the financing world over to the development side of the kind of sector, where we would have co-founded, obviously, Revolve, both myself and Omar and a number of our current directors. And I've been kind of heavily involved in the sector across the whole kind of range of developing assets, financing, construction, and operations. So fairly broad-based experience, but pretty much all focused on renewable, and again across those different technologies that Omar mentioned. So I think between myself and Omar, we've kind of been front and center of the company since we set it up back in 2012.
Steve, and your background, Ireland and the UK, maybe not a lot of solar there, but there's a whole lot of wind generation in that part of the world, right?
Yeah, would you believe it, a lot of solar now, not so much back when I was doing it back in kind of 2020 or 2006, 2007. It was primarily wind, but a lot more solar than there was there. But yeah, I mean, originally it was all focused on wind, some biofuels, quite a lot of infrastructure. But the same principles apply, I guess, in terms of permitting, project financing. Slight differences, obviously, nuances with different technologies, but fundamentally the same kind of principles in terms of trying to get through permitting, getting projects financed, and kind of trying to generate that kind of long-term recurring revenue. So skills are kind of easily applied, and I think that's the kind of approach we've taken to the business. And you'll see that a bit later on as we start to discuss it, that it's a fairly broad-based business where we have kind of wind, solar, battery storage. We're not kind of pigeonholed as just a developer of a particular technology. We take a more agnostic view as to kind of how we develop the projects.
So as Steve was mentioning, we're on a daily basis working on the company. So in my case, I'm co-founder and shareholder. I have been involved on the 300 megawatts of renewable projects done on the ground, and I used to be the deputy commercial counselor for Bank of Mexico in London. And my educational background is I have a bachelor degree in law, and I have completed several diploma certificates on energy, corporate governance, and senior business management at IPADE Business School. And what I would like just to mention about the other members of our management team, we include great people with experience like Roger Norwich, Joseph O'Farrell, JP McGuire, Finn Layden, Craig Lindsay, and Jonathan Clare. And together, they have more than 100 years of experience in different topics, as public listed companies, corporate governance, energy, finances, new technologies, investment banking, and international relations in the Americas and in Europe. When people normally ask to us about how important energy renewable energies are in the energy sector, for me the answer is very clear. Just listen to the news on any communication channel about two main key drivers: transition to net zero emissions and the Inflation Reduction Act, no, that was just approved recently, August of this year. So I think that these are key facts. So just to understand how everything is going to move during the next 10 years, over the next 10 years. If you want, I can just explain more in detail about how does this impact on our projects. So
Omar,
yes, tell me.
Sorry to interrupt. There are clearly a lot of sort of political and sort of societal factors pushing renewable energy and so forth. I think something that not everyone is aware of this, but in many parts of the world, like closer to the equator zone, like solar is the cheapest form of electricity out there. It's not just that it's like we're feeling good, though, that like the economics drives these projects, regardless of the subsidies and in some parts of the world. It's just the cheapest, best way to do it. Is that not the case?
I think that's the way it's got now, Martin. I think that's a position that's kind of developed over time, because if you look at how the industry has kind of transitioned really over the last 20 years, it kind of begun with those subsidies, as you kind of say, and that kind of drove a lot of the early capacity. But really since, and I mean, I think if you look at the graph here on my left, let's say, as I look at it, it shows that renewable energy contracted by US corporations, and that really steep upward curve from kind of 2015, 2016. And that's when you saw kind of renewable technology start to get more cost competitive with natural gas, particularly with coal, with other forms of generation. And then that's what kind of drove this big upward curve, along with some of the other kind of factors that, like you mentioned. Like I don't think you could point to any one to say that was the driver. It was a bit of everything, a bit of some of the transition, the sustainability goals from some of these corporations, backed up by maybe state mandates, particularly in the US, driving utilities to kind of go towards renewables. Then the cost aspect kicked in, which drove it up another leg. And then things like the Inflation Reduction Act and some of these, I guess, more later or latest kind of political kind of moves, I think they set the scene now for the next 10 years, which are going to, I guess, make this kind of graph look small in comparison in terms of what's ahead of us over the next 10 years. So it's really been an evolving story, if you like, but for the last kind of 15, 20 years, or certainly as long as I've been in the sector, and it's less now about the subsidies, and it's more about cost competitiveness of renewables, and on top of that, the kind of whole sustainability and drive towards kind of net zero.
With one of the, let's say, the benefits of coal or nuclear or natural gas versus renewables, except maybe like hydro, is that they're not consistent throughout the day or the season where you get windy or sunny seasons, but that's where the backup battery helps smooth out does the load leveling. Is the general competitiveness with those legacy energy, electricity generation technologies, once you add battery to it to do the load leveling, how do the economics compare with that included?
It certainly helps. I mean, the battery does different things. Obviously, it doesn't generate electricity. It just helps facilitate the management of the energy generated by solar, wind, or whatever else. It does other things like allows the utilities and the transmission operators to be able to manage the grid in a better way. So I think batteries add quite a lot to the overall network. Sitting alongside renewables, it makes perfect sense. And I think you're seeing that in the US, where really you don't see too many projects these days that are developed without batteries. I mean, that's certainly at the large utility scale anyway. If you look at the kind of network queues for transmission requests, a lot of them will have a kind of battery element to it. So I think it's definitely a benefit for sure. And it helps deal with some of those kind of challenges that maybe were thrown at the industry historically about this whole need for backup energy and how do you manage the grid. But I think that whole kind of story has moved on a huge amount, because even the utilities themselves and the transmission system operators are just a lot more adept at being able to manage their systems and forecasting when, let's say, solar will come on or wind will come on. I know that's certainly the case here in Ireland, where they do quite a lot of fairly sophisticated forecasting around wind. I think when you look at parts of the US and from a solar perspective, they can obviously tell within a reasonable amount day to day that you're going to have a pretty good solar resource. So it makes it a bit easier to manage. But I think there's a lot of different factors that are there, which are a big improvement on before.
Yeah,
All right.
and I would like just to complement that why we mentioned these two topics as key drivers, and it's because firstly, the WEC, the World Energy Council, has many times announced about the transition to the diversification of the energy matrix of the countries and of the companies. So this means basically two things: that the reliance on fossil fuels need to decrease, and the reliance on renewable energy needs to increase, basically. And this has a big impact, on what the companies needs to promote on their and to implement on their business strategy, since they now have to be they have to be sustainable. And of course, this is part of what all the United Nations members have already adopted with Sustainable Development Goals, where let's just remember, the number 7 of this list, it's about energy, and we need to ensure access to affordable, reliable, sustainable, and modern energy for everybody. So now that we understand that this is a transition that for over the next 10 years, we will see that companies will need to implement, and for that, they will need this strategy on to go to the net zero emissions, in order to comply with what I have mentioned before, and about, I mean, what is happening with the US, and this is very important. The Inflation Reduction Act, it has, I mean, we can translate it on $369 billion on funding for clean technologies and for our projects and for all the projects related with wind, solar, and battery storage projects. This is the impact. According to what Bloomberg has forecast, the annual, for example, the annual solar generation, it was in the US, it was previously from 39 gigawatts going up to 50 gigawatts by 2030. And about the wind annual generation, now it will be moved from 16 gigawatts. It will go up to 23 gigawatts. And as you can see, any projects, any part of the world where we have renewable energy projects built, then it is going to be more important, the energy storage. In fact, the US is the largest storage market right now. So thanks to this act, it will have a boost, in favor of clean power. And by 2030, just on battery storage or energy storage, the country would have 112 gigawatts of energy storage. So that's why we mentioned it, that it's just a matter of follow-up on the news. Just now go to the business models that we have, the two business models that on diversified on our strategy. So we have two different kind of projects. We have the utility scale projects and the distributed generation projects. So just to make a summary, to understand both of them, on utility scale projects, let's say it this way: it's large projects, big projects. Basically, the technology, as I mentioned before, is wind, solar, and battery storage. It takes normally between 3 to 4 years, from all the way from greenfield, from zero, all the way to a project be ready to build or ready for construction. So this is once the project is ready, then we just exit from it. We sell it. So it's for the shareholders. The value for the shareholders is that, well, the milestones payments are related to the development progress. While on talking about distributed generation projects, We're talking, as an example, like rooftop solar projects, battery storage technologies, or CHP, combined heat and power projects. So these are, the time is shorter. So we are talking about 6 to 9 months of development. And this is a difference with the others. We own at the end the project. We operate the project. So this will imply a long-term cash flow for the company, but we can go later on that.
Yeah, and Martin, just maybe for me to jump in, I mean, this is about that diversification that we kind of mentioned in the first slide, where you're kind of giving investors kind of access to that kind of development side of the kind of sector, where you can kind of get that much larger kind of milestone payments and a lot of leverage on the money that you invest in your projects, but kind of de-risked, if you want, to some extent with the distributed generation market, where the permitting is a lot simpler, the time frame is a lot shorter, and while the projects are smaller, you can get more of them done and start building up kind of that long-term recurring kind of cash flow over kind of 10-15 years.
Exactly. So let's say it in this way. It's very, in fact, it's a very simple model, to understand, where we have, let's divide it in 4 stages. Since we start with the project, what I mentioned, from greenfield, from zero, we started. We analyze places where, according to our experience and according to our knowledge of the market, has a good potential. The wind or solar resource, and they are strong, as well as the prospects of the interconnection. And we move to secure the land that will be required for the development, construction, and operation later on of the project. So once the site is identified, then we start developing the project, which means studies like environmental studies, energy resource assessment. We need just to have an idea of how much energy could be produced, according to the resource. Basic engineering studies, so we can start making some models of where to make the location of the equipments, depending on the technology, of course. And very important, we start the process on the interconnection for the project. So
Omar, sorry.
yes.
When you talk about interconnection, that is plugging in your electricity producing project into the grid, basically, because like the utility or the grid operator, like just dumping in a bunch of power, they have to manage that. Grids are very sensitive and finicky systems that need to be well managed, and they have to manage how you plug it in, how the rise and decline of the various power inputs into the system are going to affect their overall grid. So that's often one of the more tricky, or it can be a little challenging to get to sort all that interconnectivity issues out.
I think from a process perspective, it's actually a fairly regulated and formulaic kind of process, Martin. So it's actually, it's all fairly well laid out pretty much in every country that you'll operate in. So in the US, there's kind of a number of steps that you have to follow. In Mexico, it's pretty much the same thing. So I think from a process perspective, it's actually pretty well understood. You can go through it, the costs up front. I think, let's say on the probably challenge now is you've obviously got a lot of projects looking to connect. So you're trying to find gaps in the market where you can interconnect without generating, let's say, a lot of transmission upgrades. So I think that's really the trick when it comes to interconnection, not necessarily the process or working with the utility, because that's all fairly, as I said, regulated, fairly well explained. So I think for us, when we're doing our kind of pre-feasibility and looking at that step 1 in this graph, you're looking to find those areas where you think that there's potential opportunities to interconnect into existing infrastructure, or let's say what we've done in a number of states is you've looked at a lot of the utilities will have these long-term transmission upgrade plans that they have to publish every year. So you can get a really good read on, okay, let's say in Colorado, I think we made a reference to that in the recent announcement we put out. The utility in that state has a fairly sizable transmission upgrade plan that they're going to implement over the next 5 years. So you can kind of get a sense as to where the utilities are looking to put new infrastructure to facilitate, in a lot of cases, renewables. And then you can tie your development around that. So that's probably more where you kind of have to work out from an interconnection point of view where you're going to site your projects. But as I said, the process isn't that overly complicated. You just got to go through it, and it can take a couple of years. And I think that's probably the biggest lead item in a lot of the project development on utility scale. It can just take 2 or 3 years to get through that process of interconnection before you actually have your agreement.
Do utilities or grid operators like put out like requests for proposals saying, hey, we're building stuff out, we'd like someone to put in a solar or some kind of renewable thing here, and then, or is it that you just scour out different locations, say, hey, there's something in Colorado, we should sort of get in the queue there? And obviously I've simplified it greatly, but
yeah, no, I mean, it's again, it's a bit of everything, and you'll find there's no one answer to anywhere in the US because the states are all different. But I think what you find is, and again, this was some of our rationale as we moved into the US, some of the utilities have already announced, let's say, net zero plans or plans to phase out coal. So they've actually given the market pretty clear signals on where they're going with their generation profile that they would like to have in state. So you can kind of take a view on that and say, well, let's say, I think in Arizona, they've already announced plans to phase out all of their coal by, I think it's between 2030 and 2035. So, all of that capacity is coming off market. It's going to be replaced with renewables, maybe some natural gas plants, but primarily renewables. So you can take a view on, okay, maybe it makes sense to develop in Arizona. I mean, that was our thought process as we moved in there. There are some RFPs that do come out, but you generally find this in the regulated markets. Like at the moment, there's an RFP out from PNM that's in New Mexico. You've one out from Pacificor up in Utah and across their various different jurisdictions. So you do get those RFPs out as well. I think it's hard to go into those without a development already underway, if you like, because they generally have commissioning dates that will be within, let's say, 4 or 5 years. So kind of hard to start right from the start in terms of trying to find the site to match that RFP. But again, I think they've already given good signals to the market that this is the way they're going. So you can kind of make kind of educated decisions, if you like, as to where it makes sense to put a project based on where the utilities or corporations in some cases are going.
And so with the utility, your model under utility scale is you take it from start and you exit when it's construction ready. So basically someone buys the project from you and you say, here are all the engineering plans, the applications, the whole thing. Now you go build it. You raise the big money to actually build the project, and we're going to pay you for all the development work that you've done to date.
Yeah, exactly. And I mean, I think I flicked on to the next slide, but I think this is the best kind of way to show it to you in terms of, we set out an illustrative case just to kind of try lay it out easily for kind of investors to understand the model. So I guess this is the 4 steps that Omar had mentioned. We've given obviously a very generic idea as to kind of what the costs are for each step. So for a 200 megawatt solar project, not including battery in this case, so just pure solar, let's say you've kind of a 2 million investment. A lot of that 2 million is actually at the back end of the project development. So it's not upfront. Actually, your costs in year 1 are not so great. It kind of builds up as you start to make progress and de-risk the project from a development perspective. That's spent over that 3 or 4 years that Omar mentioned. And in terms of development returns, and we feel these are kind of conservative, particularly as to where you've seen development margins going over the last kind of year or two. You can make on a solar project 40 to 50,000 per megawatt. So an 8 to 10 million return on a 2 million investment. And that's kind of very roughly kind of lays it out. And it's a lot like, I was trying to find a way kind of to simplify it and kind of make it more relatable. And it's a lot like general property development, where you have a greenfield site on an edge of a town, you go get it rezoned, you maybe bring some services in terms of electric and water, and then you get permitting from the local council. It's the exact same process, except we're doing it with a renewable energy site.
Gotcha.
And this is the kind of returns that you can generate. So there's great leverage that you can get on your kind of development expenditure. And if you go back to the first slide that we spoke about, which to me is always the key one, a key message we try to get across to investors. Like, as a private company, we raised around $3 million over the period of kind of 3 years from 2012 to 2015. We developed that 300 megawatts of assets that we managed to sell, and we realized 17 million of revenue for our shareholders. So that's
Right.
what we've done historically. This is the illustrative case of kind of what it looks like on a project by project basis. But if you just do the maths, you'll kind of see how the kind of value attributes to us.
So for $3 million pre-public, you generated $70 million of revenue. And if your costs were like, that seems like a very high return on investment.
Yeah, that's what you can see. And I mean, you'll see that country by country. And I mean, if you look at Europe, these development returns will be low in European terms. I think the US is obviously a competitive market. Development returns are a bit lower. They are starting to increase. So we think these numbers are conservative. And again, a lot of that comes out of those industry drivers we mentioned, Inflation Reduction Acts, the kind of drive towards net zero, the need for projects like the ones we're developing, assuming you can get them through to kind of ready to build.
You mentioned along that the projects get de-risked along the way. What's your how often do you go through project origination and I don't know, you spend a couple $100,000 and you realize this project's a dud. Something changed or we misread something and then you pull the plug on it and go to another one. Is there a lot of failure rate near the beginning of the process or along the way, or is it just a lot of sort of hard work getting over the milestones?
I mean, for sure, there's definitely projects that will fall through the net. They generally do a lot earlier on, so you would typically never have hundreds of thousands of dollars invested in a project because they would typically fall down on interconnection, like you mentioned. That's probably the biggest one because from a resource perspective, you can actually do a lot of that work on desktop. You can see what the wind resource is generally, what the solar resource is generally. Land, you have site control. Generally, site control is not that expensive. And it really comes down to interconnection, and it's really that first step of the interconnection process that projects would either need to be maybe redesigned and go a different way, maybe go for a smaller project or phase the project. So there's different ways that you can kind of manage them. But you'll generally find out a lot earlier in the process if you're doing your feasibility right. And that's what I was saying in terms of that 2 million. It's not at risk day one. It builds up, and a lot of it is invested when you already have permits in place, when you've already been through your first or second phase interconnection study. And by that stage, you know you've created that value. You know you have a project that you can get to the end, if you like.
And I would like also to add that it would be somehow easier to identify these kind of bottlenecks, because if you are stuck in one of these stages, then it's pretty hard just to move to the next one. So the idea is, of course, that we could identify since an early stage and through the process of the development, what kind of bottlenecks we can find out, and we will struggle in a project, and then we can take decisions. Of course, there's no a single formula, as Steve was mentioning. So it's very important all the time that we have to keep making analysis on how the project and each project is moving on, and it depends as well on the type of technology that we are looking for that project.
You mentioned that this example here is without battery. Obviously, you could add a small battery sort of station to a 200 megawatt project, or a big one. Like, that's kind of variable how much sort of load leveling or backup you want in there. How much additional adding battery to it, would it increase the cost of your getting it to construction ready a lot, or does it just add a lot to the final construction part of it because you got to buy the batteries and plug them in? Yeah,
no, it doesn't add anything to our metric. It's more, as you said, for when you're going into construction. I mean, there's an added complexity maybe when you go through interconnection. How are you going to make that battery work alongside the solar? Will it be front of the meter, behind the meter? But other than that, that's just engineering. It does not cost from our perspective.
And a 200 megawatt solar project, how much capital would, like, once you exit it, the project owners, then how much money are they going to have to put in? What does it cost to actually build a 200 megawatt solar project, roughly?
Yeah, I mean, it's hard. It's, again, there's no kind
ballpark.
of straight answer, but like 150 million, something like that. Again, it depends. I mean, a lot of it will depend on interconnection and various different things, but 150 to 200 million.
Okay, that's good. Yeah, I'm not trying to buy one from you.
Yeah, I mean, it's right. Again, it's
just sort of sense of scale.
Yeah, again, it's very regional. The only final maybe point I'd make on this slide, Martin, is in terms of when we exit, you don't have to wait until you're all the way out ready to build to exit. Historically, what we've done is we've looked to de-risk the project from our shareholder perspective, kind of midway through that step 2, if you like. So if you look at what we've done historically, we've actually entered into transactions in that more mid-stage development, maybe before it's fully permitted. We've locked in value for our shareholders. Sometimes you're able to take a small bit of value off the table. And then you work with that partner then to bring the project to the final step.
So you'd maybe sell off a portion of it, like call it 50%, you sell off, you get some shareholder money back, you reduce the risk on it, and then you move it forward together?
Yeah, no, it's not a minority share or anything. You actually give an option to buy the project or exclusivity to one particular party, and for that they might pay you an option fee, and then you work with that party to get it fully permitted, and then they buy the project outright once it's ready to build. And so I think the main point is you don't have to wait the 3 or 4 years before you sell.
Yeah,
you can do it in year 2, and that's what we've done historically.
Just about the portfolio on utility scale. Well, in the US, we have a presence on 4 states: in Colorado, New Mexico, Arizona, and in Utah. And all of them, they are more or less over 100 megawatts plus. And we have 2 main projects that we're talking about 1,250 megawatts, that they are moving very, very fast, and they have a better progress. And that's the ones that we highlighted in green. And basically, it's about what we have done on the process on the land management, securing the land, basically, and about the interconnection process. So both of them, they're very important just to highlight on what we have done. And it's important also to mention that we started with this portfolio on 2021, and we have doing this progress very rapidly, and hopefully the targets for ready to build can be completed by the end of 2024.
And the way to look at this partner for me is always, effectively, it's 8 opportunities to earn the kind of returns that we outline on this. That's the way I look at the portfolio. You've kind of got 8 shots to try generate those types of returns. And I think that's interesting when you look back to the market cap of where we currently sit, and the kind of cash value that you can realize for some of these assets when you kind of start to look at that. Yeah, I mean, it's a really exciting portfolio. I think we're in some good states, making some good progress on projects. We obviously put out an announcement on the Primus Wind project there last week. Another interesting project in Kit Carson we're making some progress on. The Vernal BES project is also making progress. So, I mean, some good milestones been hit across the portfolio.
So these projects look like they're kind of in phase 1, 2 of your 4-step process there.
Correct. Yeah, correct. I think the ones in green are the ones we highlight them because they're the ones that are more advanced. So they're getting to that kind of mid-stage development where we've secured site control, we've done some field studies, we're in the interconnection process, we're going past that first step of interconnection. So we're starting to have a reasonably good idea on how the projects are shaping up.
So with these projects, and you're saying after sort of phase 2, 3 in it, you could like sell off some option on it and realize some value. Is that there the potential? And given that it's a 2-3 year process, these are 24, 25 ready to build targets on here. So over the coming year, would it be reasonable to maybe see some realization of value out of these projects?
I think I mean, we highlighted, I think, further on down in the presentation. I think that's our hope, or at least expectation, that we will be bringing some projects to market. Obviously, there's a lot of work to do in between now and then, but yeah, certainly that's how we have done it historically. That's currently remains the strategy. So I think as we move through the course of next year and start to get some of these projects further de-risked, we will be looking at those kind of transactions for sure.
So likewise on the projects that we have in Mexico, in the Northeast, and basically we're talking about wind technology. They are with a good progress, and we're just waiting on the market to be open, and then we can continue with some of the interconnection process that we need to follow up.
These the 2 highlighted green ones there, those are ready to build in 2023, which is just kind of shockingly not too far away. Are these Mexican projects ones acquired through the Centrica acquisition you announced in the summertime, or are these projects you'd been working on prior to that?
No, these are our own greenfield. So these are utility scale. I think the Centrica was a distributed generation portfolio. It wasn't utility scale. So these are projects that we started developing ourselves. I mean, the Alvente Quattro project is fairly late stage, but as in Nueva, maybe not so much, but again, it's kind of mid-stage development. I think a lot of the progress on those projects will really depend on progress with the regulatory framework within Mexico to allow private generation projects to continue. I think historically Mexico is the fastest growing, one of the fastest growing renewable markets in Latin America. They were adding a couple of gigawatts a year, so it's a really interesting market. I think the last couple of years it's been a bit slow because the government have looked to change the kind of regulatory regime, but that will get sorted out. I think there's currently probably 2 to 3 gigawatts a year of new generation required just to keep up with electricity demand in Mexico. So you're going to see as you go forward a requirement for new generation capacity, full stop. But then obviously the same drivers in most countries, a lot of that will come from renewables. So we think we're pretty well placed. We know Mexico extremely well. We've had some success down here before. These two projects are located pretty close to where we sold projects previously. So we know this area extremely well. And from a wind regime perspective or wind resource perspective, this will be probably one of the best areas within Mexico for wind. And has a kind of similar profile just north when you go into Texas, which I think Texas at this stage probably has 8 or 9 or probably even more gigawatts of renewables.
So now we're talking about the second business model, no? Where we are talking about these distributed generation projects, no? And the portfolio that we have. So the business model is very simple. No? We look for the project, construct the project, finance, and then we own the project, we operate it. So we keep on a long-term power purchase agreement with a customer. No?
Yeah, I can go through this, Omar. So again, this is another illustrative case, Martin, of kind of what does a distributed generation project look like. So we've picked a kind of 2 megawatt hour battery storage system. You got a couple of steps here that Omar mentioned in terms of project origination, and that's really putting a proposal in front of a customer, running the technical kind of analysis, cost savings analysis, going through their decision-making process. Once they decide then to go with ourselves, you then got a period of kind of 6 months in terms of getting the project signed up and getting it constructed. And then you have that 10-year plus really, because it depends on the counterparty. Sometimes it might be 15 years, but 10 years would be kind of the average for a power purchase agreement with that customer, where they're going to pay you over that 10-year period for whatever system you put in. In this case, in terms of a 2 megawatt hour battery storage system, that's going to cost you around $1 million to install. And in terms of investment returns for our shareholders, we're looking at IRRs of kind of 15% plus. That's on an unlevered and pre-tax basis, and an annual EBITDA of give or take around 180,000. Again, this is just kind of illustrative. On average, every project can be a bit different.
And sorry, with this case study here, 2 megawatts of battery storage. So all you're doing is installing a battery system. There's not actually renewable source attached to it. So what it provides the client, the benefit there is, let's say if there's a power outage, they've got backup, and then they can sort of charge up the batteries when maybe in the middle of the night when power is cheap or whatever the dynamics of that industry are, and then drain the batteries during like peak rate hours.
Yeah, more the last point there actually. I mean, again, every market is different, so battery operates kind of different depending on the utility. But in the case of, let's say, Mexico specifically, it's all behind the meter, so it's not front of the meter, so it sits behind the customer's meter. As you say, a lot of these industrial kind of electricity tariffs are based on let's say base, intermediary, or peak kind of charges. So if you need electricity at the peak, you're going to pay the highest rate, plus you're going to have to pay the utility like a standing charge for having access to that power during that peak period. So what the battery does is it really takes the energy that they would otherwise buy at the peak and provides it through the battery. So there's cost savings kind of from the customer perspective. When we work that out, we kind of go through the customer bills, we look at their electricity profile, we're kind of able to determine what those kind of cost savings are on a kind of long-term basis. And that's why it's interesting to clients. It has the added benefits, like you say, that there'll be a small bit of backup power. I mean, these systems are generally an hour or maybe 1 hour systems, so they're not going to provide you with backup power for like 4 hours or whatever. They're generally a lot shorter term, but they still do provide you with a bit of that backup standby generation, like you mentioned. And they do other things, like in some parts of Mexico, you'll have issues like frequency issues and power quality issues that are really important for manufacturing facilities. You've got big kind of big machinery on site. So there's a few other kind of added benefits which they do bring as well.
Is this essentially like a financing program for a company? They pay you 180 grand a year over 10 years, call it, to basically fund it, or is it kind of a profit sharing where depending on where peak rates are and so forth, you kind of split the cost savings? So maybe some years it's less, some years it's more.
A bit of both again. I mean, there's generally a minimum payment that they have to pay, and then it's the sharing of cost savings, and most of those, the savings will be split depending on the project, depending on the peak load. Again, it changes. I mean, if you look at the US, with some of the US projects, it'll be a lot simpler. It's just a simple capacity payment that you will get for providing access to the battery system for the local utility. So the business model depends on kind of where you're installing it, be it in the US, state by state, or in Mexico.
And on a project like this, your plan is not to sell it. You're like the utility scale ones, you're going to sell off, let them spend the hundreds of millions of dollars to develop it. But you're going to spend what I think you said, 1 million total invested by the company. You're going to own that project and then make 180 grand of EBITDA off of it annually as a residual. So there's more of a recurring nature to your revenues as a business.
Correct.
All right.
Exactly. Well, and just about this, what we have announced is that on last August is that we completed the acquisition of the Mexican subsidiary of Centrica. So this is bringing to the company almost 6 megawatts on projects, on capacity, divided on 2.85 megawatts on assets in operation, plus another project that it is almost ready and is installed, but waiting for the last permits so it can start operations. And this will be according as well to the business strategy that we announced recently about to go into the distributed generation market rapidly, and that can give us a portfolio that can give us the chance of make a good progress and growth of our portfolio on DG projects.
Yeah, I think, Martin, the only thing I'd add is this is a kind of really nice acquisition for the business. It fast-tracked us, as I say, into the distributed generation market, but there's a lot of upside. Like if you look at the cost, it was $1.4 million with some cash and spare parts, so really probably 1.25 million net for what is 6 megawatts of generation assets. And whatever way you look at that, it's a kind of attractive deal from our shareholders' perspective. If we can bring on this additional 3 megawatt projects next year, you're looking at kind of at least forecasted kind of revenue and EBITDA of close to $1.5 million on the revenue side and 700,000 on an EBITDA from an EBITDA perspective. So it's nice kind of acquisition from our perspective, and it fast tracked us into the sector as Omar mentioned.
So prior to Centrica, you weren't doing the distributed generation model. This is what sort of got you into the market.
Yeah, well, we had looked at it, so it was on our strategic kind of radar, if you like. But when we looked at it, we said, well, you can kind of go about it two ways. We can spend kind of a year trying to build up a team, build up a pipeline, and kind of converting that pipeline. That will take time. Or we can see if we can find an acquisition that would suit. That just happened to kind of correspond with Centrica deciding to step out of the Mexican market. We knew the guys in Centrica from previous discussions, so we were able to kind of get exclusivity on the deal, and then we used this deal then to kind of launch our broader ambition into the sector. And I think it made perfect sense for us because it gives us that operational base, even though it's small. It's still long-term cash over the next let's say 8 years, which is the average left on these PPAs. Gives us the upside on this 3 megawatt project. And then once we got that closed, very quickly we announced another 3.2 megawatt battery projects just there in September. So all of a sudden we've gone from 6 now to 9, and obviously the intention is to continue to roll out and get the momentum behind it with the pipeline that we have. So
and then you're just very in the final strokes here to plug in the extra 3 megawatts of power into the system, which will then start generating revenue from day one.
Yeah, a small bit more to it. So it'll be
Okay.
a bit more work, but I think in terms of the key thing to probably remember is it's a project that's already installed, has already been pre-commissioned. So
Yeah.
it's sitting in the customer site. So there is some final permitting that needs to be done. So that needs to be worked through. That's a timing issue from as far as we see it. So we try to give a bit of guidance in terms of H1 next year. Obviously, a lot of that will depend on how the final permitting process goes. But for all intents and purposes, once those permits land, then yeah, you would be hoping then to get that project started pretty quickly.
This seems like a really good deal. Like it's like a 2-year payback or something like that. I guess a little bit less. It's partially funded with a royalty agreement, so they're clipping a bit of that cash off of it. But that looks very impressive.
Yeah, no. Still, I think even with the financing that we got on it, I think it's still an attractive deal for everybody. Yeah, for sure.
Yeah.
So just looking forward on the next year and beyond, we will keep basically very active, no, on our utility scale project. So we will keep developing it and focus on what we have to do on the follow-up on the interconnection process and land to manage, no, the land that we need to secure for the projects. No? So we will just follow again with the process that almost looked like a very straightforward process. And we will as well keep developing on the permit surveys and studies that we need for the other projects that are in our portfolio in the US and as well in Mexico, just to keep doing the progress and on these kind of utility scale projects. And about the second model that we were talking about, the distributed generation, I think that we want just to take advantage of the momentum in Mexico and in the US as well, because in the Mexican market, this is one of the main topics, DG, so this is helping companies, as we were mentioning, on how to achieve their goals on net zero emissions and with their ESG, especially in the environmental strategies that they need to implement. So we will do this on developing the current portfolio, plus some extra portfolio around 40 megawatts projects that we have on the queue, analyzing. So we would like just to make progress on all of them, and the same with the rest of the projects that we have in the full portfolio.
Yeah, and probably one point we didn't maybe touch on Martin, which I think is important, and again, it was one of the kind of strategic rationales of going into DG, is there is that bit of crossover and synergy between the two, because when we're in front of, let's say, multinationals talking about maybe some small scale solar, they also have or may have much larger kind of power requirements, which may suit some of the utility scale projects that we're doing in terms of trying to contract them to those projects as well. So it's kind of interesting that there is a bit of synergy between the two. Also, from some of the clients in Mexico may also have operations in the US, so we're seeing some crossover there. So they kind of do, while they sit alone, and we do have different business models around, there is a bit of synergy between the two of them as well, which is interesting. Not a lot to say on this. I think it's just a summary of share information. People can find our ticker or EVV, so they can find it obviously on the Toronto Stock Exchange, and just some information in terms of shares outstanding and cash and balance sheet.
Yeah, and I guess things to highlight here. You've your cash, your debt position doesn't seems reasonable, especially given you've got more than that in cash on hand, and you've got some cash flow generation happening right now. And then as well, insiders own 60-ish%, which is a good chunk.
Yeah, exactly. And I mean, we're under following the RTO. A lot of that is under escrow arrangement as well. So we're certainly here for the long term. We're fairly committed. A good few of the management would have invested in the RTO fundraising as well, and so continue to support the business.
All right. We do have questions from the audience here. So any final comments before we switch over to the queues?
No, happy to answer questions.
All right. Is the company planning on any investor roadshows in Canada and the US, or presenting at renewable energy conferences in the coming months?
I guess the short answer is yes, definitely on the agenda. So we're constantly looking at them. I think it's trying to find the right one that marries both renewables and kind of that investor aspect as well, I think, which is pretty key. But yeah, no, definitely it's on our agenda.
Can you discuss the financing needs in order to reach the project monetization for your utility scale project development? Or I guess It's a great question. Are you going to have to raise more capital? Are you fully financed here to get the your utility projects, or I guess all of your projects, over the finish line?
Yeah, well, I mean, we haven't provided any guidance in terms of future financing needs, so we won't talk specifically about it. But I think if you look at what we've done historically, Martin, or what we've tried to do is we raised that 3 million that I mentioned as a kind of private company. We didn't raise any further funds until we exited projects, and then we were effectively self-funded. So that's the model that you look to replicate. It's not always possible to get the timing exactly right, where you can kind of exit a project, realize some value before you have to raise money again. But that's certainly the intention. And there are plenty of other kind of financing options out there for renewable energy companies such as ourselves as well. So we're constantly looking at potential funding options. I think in terms of the overall plan, I mean, if you look at the projects we have under the development and that 2 million per project, obviously there is further capital to get every single one of those projects to ready to build. But that's not to say you don't fund those out of selling another project or some other financing. So it's kind of difficult to give a kind of specific answer on it, if you know what I mean.
Gotcha. So, but it does seem like you have a fair amount of flexibility. You can sell the options earlier on some of these projects that are getting close to ready to build. You could sell off you've got some cash flow now. So there is several things you can do there. But
correct.
Like financing, it's always a moving target and so forth.
Yeah, exactly.
Has the Inflation Reduction Act increased utility scale project valuations?
I guess the short answer is not on its own. I think what it will do, which is probably more interesting, is it because it's now basically set the runway for the next 10 years in terms of tax incentive schemes to support renewables. What that will do, or what it has done, is give a very clear signal to investors, and I'm talking about kind of utilities, institutional investors who want to own kind of the projects that we're developing, that the US is the market to be in. So if you're not in the US already, I would say it's probably definitely on the radar of companies who are going to come in. So I think it will bring in more potential buyers of the projects that we're looking to develop. Whether that leads to increased valuations, we need to see. But I think intuitively you would think, yes, more competition for projects should increase valuations. But I don't think it's specifically because of the IRA. I think it's a lot of different things that are in there. Because I mean, even pre that piece of legislation getting enacted, I mean, the US market was extremely active already. This just then has set that scene now for the next 10 years.
Exactly. I think it's a clear message, and a clear signal from the government in the US of what they want to do in the renewables, in the US. And absolutely, this will have an impact on infrastructure and energy consumption and diversification of the matrix, as I was mentioning at the beginning. So absolutely, it will have a general impact on all the renewable energy projects in the US. And absolutely, it's the main place where, the main market now that everybody is going to be looking for.
All right. You made a comment, and I actually don't remember hearing this, but there's a question here. Could you elaborate on your comment that on waiting for the Mexican market to open?
Yes, the current administration just a move to different priorities, let's say it that way. So the market has been just based or focused on the DG portfolio of renewable projects, and the large utility scale projects have been more on the utility electricity company in Mexico. So we will be we're just waiting until the current administration it's going to open again these kind of utility scale projects to go ahead. And they already have announced, for example, a solar large project in Sonora, and we're just waiting on the administration just to keep demanding and opening for these sort of projects that will be absolutely helping to the country to progress and to achieve, of course, targets that they have for 2024 and for 2030.
Yeah, I think you find this sometimes, Martin, where like the Mexican market was, as I said, one of the fast growing markets, a lot of capacity getting added. A new government come in, they have a kind of different viewpoint as to how they want the regulatory system to be set up. It takes a number of years to for that to work through the political kind of system. I think that was up for a vote, was it earlier this year? It didn't get through. So the existing framework remains in place in Mexico, which allows private generation projects. I think the government just need to figure out how they can match what their objectives are with allowing further private generation to come on stream. But they've been very clear all along that I think it's 45% of the market they're leaving for private generation projects. So it's just a case of when, from our perspective. I think the longer you go on, the bigger the issue becomes for them, because if you go back to that energy demand issue, and when you're starting to add like 3 to 4% on your electricity demand every year, that's in a country like Mexico, that's 3-4 gigawatts, of new generation capacity, which hasn't been met for the last couple of years, and it just backs up. So at some point, they're going to have to figure this out. I think in the last 2 weeks, you've started to see some positive noises through some intergovernment meetings with the US and with Canada. So I think the noises have certainly improved over the last couple of weeks, but we just kind of have to wait and sit it out. But as I said, I think we're fairly well positioned with some good projects in good areas that we know work from previous experience.
All right. And then one final question here on your distributed business. The question is, how quickly do you expect you can grow that distributed business? And I guess another way of phrasing it is, how many new projects do you think you can add on a year, or what is your capacity or the market's capacity to add those on?
Yeah, I mean, again, we haven't given much guidance in terms of what we expect going forward, but I think what we will say is, like, we've got the Centrica transition or acquisition obviously completed. We've announced one project already. I think we've indicated in this presentation we've got another 40 megawatts plus. That's probably more now than it was even when we put the presentation together. So that number is certainly increasing. So we're seeing a lot of opportunities on the distributed generation side, and I think a lot of that is driven by general electricity prices. I think regardless of what market you're in now, if you talk to companies, they're suffering with much higher electricity bills, capacity charges. So there's a much bigger drive for them now to be looking at these types of projects. So I think that I won't say it's kind of endless, because there's obviously a finite amount of the projects, but it's certainly growing pretty quickly, both across Mexico, the US, and indeed in Canada as well. So it's a fairly fast growing sector.
All right. And then one final question for me before we wrap this up. What types of news flow should investors be looking for over the next 3, 6, 9 months? Announcement of new projects, maybe selling off or optioning off some projects, that sort of thing, or you can give some more thought on that?
Yeah, we kind of try to lay it out in that kind of slide that Omar went through in terms of what to expect from us. So you'll obviously be updating the market as we bring through some of the utility scale projects as they hit various milestones. We'll certainly be communicating that to shareholders. We've mentioned things like potential sales of assets next year. Obviously, that's something we'd like to achieve. Very hard to pin that down right now, but it's certainly something we'd like to move towards. And then on the DG side, I guess you'll have a couple of different things. One, we'll be reporting on obviously the progress of the Centrica acquisition. Hopefully, Q1 results will contain the first revenue generated, and that'll build over the course of next year. So you'll start to see the full year impact of that coming through. Early next year, we'll hopefully be bringing on that battery project that we announced in Cancun. That'll come operational again. That'll start building cash and revenue for us. So I think expect us to be busy for sure. Like, there's a lot of projects in the portfolio on the utility scale, and as I said, the DG part of it is growing quite a lot as well.
Excellent, guys. Thank you very much for taking the time to talk with us.
Appreciate it.
We learned a lot here, and have a great day. Thank you.
Thanks a lot, Martin. Appreciate it.
Thank you, Martin.